Hello and welcome to this special edition of Insurance Mantra only on ET Now. As we have just observed National Insurance Awareness Day, we turn our focus to the future of India's insurance sector. How do we build greater awareness, strengthen trust, improve customer protection, and achieve the vision of insurance for all by 2047? To discuss the road ahead and impact of latest reform, we are honored to be joined by IRDAI Seth, Chairman of IRDAI. Thank you so much, Ajay sir, for joining Insurance Mantra. It's an honor to have you with us today.
His pleasure is mine.
Sir, just we celebrated and observed Insurance Awareness Day, and we have seen that most of the CEOs have written long messages on insurance awareness. Do you think that issues of mis-selling, issues of insurance affordability can be reduced with insurance awareness? And recently, you have also came out with a draft of Policyholders Education and Protection Fund, PEPF. So what all this Policyholders Education and Protection Fund is that with this fund will work on the grievance redressal also?
First of all, my greetings to all your viewers and to all policyholders on the National Insurance Awareness Day, which was yesterday. On the issue of mis-selling, awareness can play a very, very significant role. It is awareness not just about the need, that why to take an insurance, but also being aware of what one needs, what the products are, what the product's performance is, what the pricing of that products are.
Okay, sir.
And being aware of rights as a policyholder, as a customer at the time of purchase is an equally important part of the insurance journey.
Okay. So as a regulator, sir, are you worried about the mis-selling issue? Because when we talk to insurance industry CEOs, they keep saying that the percentage of mis-selling is very small. You should look at the amount of claim we are settling, the amount of other benefits we are giving to policyholders.
See, first of all, this is a sector wherein a promise is made for delivery of service in future if required.
Yes, sir.
Meaning that this sector is built on trust. And trust is either 100% or it is zero.
Okay.
There's nothing like a 99% trust.
Yes, sir.
So this it is important that there absolutely no case of mis-selling. Mis-selling is not only about selling a wrong product, it is also about mismatch in the expectation. For example, in a life insurance product, it is not just protection. Pure protection is well understood. But a protection combined with savings, intention with which a policyholder bought a product and at the time of the claim settlement suddenly realizing it is a different product,
yes, sir,
creates a doubt about that trust.
Every year, sir, a lot of complaints that the policyholder was not aware that it's a long-term policy. They just thought it's a single premium, and next year when they have to pay the next year renewal premium, at that time only they get to know.
Certainly, and if you look at it overall, this sector has done well. But when compared to, or say done well in the sense, ours is a fast growing economy,
yes,
rising income level. Life insurance sector is growing just about at the same rate as the economy.
Yes, sir.
Last 10 years, economy become 2.5 times, nominal rate,
yes, sir,
nominal terms. Life insurance also became 2.5 times. General insurance grew 3.5 times. But both are growing, but not adequate enough, giving that a large unmet need in the economy. It should be growing much, much faster. So keeping that in mind, clear awareness, trust of a much higher order can take the sector to a much higher rates of growth and satisfying the unmet need of people.
Okay, sir. So the role of this PEPF fund, Policyholders Education Protection Fund?
Okay. This fund, of course, we have been mandated or rather nudged by the Parliament that we shall constitute that fund. And within the authority, we took a decision that we will transfer a very significant amount of surplus already available with us. So this fund has been set up with a corpus of 800 crore, and idea is that whatever is the interest income every year will be utilized for the purpose of policyholder education and protection. We have in the consultation paper suggested 4 or 5 possible usages. Of course, one is an education and awareness. Second one is that support for grievance redressal. Third one is unclaimed amount, what kind of infrastructure can be created, mechanism can be created. And the fourth one, technology-led initiatives on policyholders protection. So these are the 4 usages have been done, and our expectation is that as we move along, the corpus should increase. But anyway, in a year it would give us an interest income of at least 50 crores a year. So that will be utilized to supplement what the industry players themselves are doing to create awareness. So this will be a supplemental effort,
And so
but this will focus entirely from the perspective of the policyholder.
And so industry players will also contribute something in this from percentage of their premium?
So the Act has said any other source, but I am not looking it at that they have to contribute here and then utilize it, that they do it on their own. But this fund will certainly focus on, just give an example, we do hear complaints of misselling, or not just a misselling, people suddenly surrender their policies or stop paying premium. As a system, we do not go to them and ask why did they surrender their policy? Was it a lack of income with them or some other reason? Somebody stopped paying premium. What was the reason? Go out to them and ask them, because it's an important part of learning and taking corrective measures. So this is one such area of reaching out to people who are not satisfied.
Okay, so will help in improving persistency also.
That's correct.
Yes, sir. So under the reforms, Insurance Act amendment, and we have seen that 100% FDI is allowed. So do you think that foreign insurers will have interest in Indian insurance sector? Because we have seen when FDI was raised to 49%, not much of interest, to 74%, hardly few players entered. So with 100% FDI, how much hopeful that new entrants will enter in India's insurance sector?
There's a lot of interest. In fact, just about 2 months back, two new licenses were approved. In today's meeting of the authority, one more license was approved. It will come out in the release shortly. There have been requests, or rather we have already approved one of the foreign investor, rather a promoter, going up to 100%. Then there are a couple of other applications which are under consideration of the authority. So a lot of interest coming. More interested on the general, but recently one big player also has applied on to come into not as a green field but as a brown field in the life insurance sector as well. So it's showing a lot of interest.
A lot of companies will see in coming times.
That's correct.
Yes, sir. But sir, pie is not increasing. The overall insurance pie is not increasing. If we see by the penetration metrics also, with the number of policies also. So is the regulator worried on that front? Because if pie is not increasing and more insurance players are entering into the insurance system, then there will be a competition, there will be a more and more commission structure, change in commission structure, more and more offering of commissions to acquire the business.
Are we worried? We are aware of the challenge and we are working with the industry to get those reforms in place which will enable the industry to grow at least 1.5 to 2x of the growth in the economy. And that creates place for everybody. But yes, this has been a challenging one, that we have top 4 or 5 players in both segments. In life, about 5 players which are of decent size. In general insurance, maybe about 7 and 8. Other companies are unable to break out from the herd and then saying that because of the new business strategy, we are in a position to grow. So sector growing at just about economic rate of growth is not good enough.
Not acceptable.
It has to be 1.5 to 2x.
Yes.
And that is possible with right kind of reforms. And again, Sabka Bima Sabka Raksha Act has clearly nudged us that we have to undertake that reforms without any delay.
Okay. But sir, going ahead, there will be some sort of stability because from last 5-6 years, we are seeing that a lot of changes in insurance sector, although changes are beneficial for the policyholder. For example, in 21, we have seen the new tax regime. So there's no incentive for buying an insurance policy. In 22, we have seen the limit of 5 lakh rupees in life insurance. In 23, expenses of management rules were there. In 24, surrender value rules, which impacted life insurers. In 25, the 0% GST is impacted in the ITC. And 26, we'll seeing the distribution reform. So going ahead, there will be some sort of stability.
I see it in a different perspective. Take the case of GST. Extremely important and a beneficial reforms, not just for the policyholders, but even for the sector players. Government signaled that insurance, health, as well as life, retail, for the individuals,
Yes, sir.
no tax,
Yes,
which
sir.
is akin to
Yes,
what the position on food items are.
Yes, sir.
So that has opened up huge amount of business opportunities. This is not saying that there is some embedded tax is there. It is a question of huge amount of business opportunities. Question of regulations around first year surrender. Why does the need for first year surrender arise? Because of the mis-selling. People who have bought the policy as a long-term policy today, surrendering it within a year, again, those who have got caught, they bought a product or they were sold a product which was not right. It was a signal that the first year high premiums should get moderated. So these are the measures which were taken for the further growth of the sector. So yes, it is the reforms or rather policy stability certainly, but in a growing sector, changes have to be nudged, changes have to be piloted and have to be guided. So it all will be through a extensive amount of consultation and then enough time being given for the industry to settle to the new requirements which may come in.
So that I said, sir, all these changes were beneficial for policyholders. Sir, we've seen that in economic survey and financial stability report, there were concerns were shown about the commission growth in insurance industry, particularly in life insurance industry. So how regulator is seeing the concern shown by Finance Ministry and RBI?
These are very much being addressed or sought to be addressed through the distribution reforms which we are formulating, and I do expect, and I had mentioned it earlier, that we would come out, by this time we should have come out with a consultation paper, but I do expect that today is the second last day of June, but by next month, by end of next month, certainly we have a consultation paper. And there are several pieces in the distribution chain wherein the interest of policyholders, insurers and distributors are not exactly aligned. At times they are in conflict with each other. I don't expect that their interests will always be the same.
Okay.
But they should not be at conflict with each other. Those are the elements which need to be addressed. Similar manner, there are few regulatory arbitrage situations are there. There are few players or elements in the chain which are on open architecture, and they compete on commission rather than on price, and that too something which is not disclosed to the public or to the policyholder. So there are few corrective measures are needed, and the concern which had come in the economic survey and prior to that in the financial stability report which RBI brings up, and another report will be coming tomorrow, is a 6-monthly report, and we do hope that distribution reforms will be addressing a major part of those concerns.
Sir, you just said that transparency in the distribution. So does that mean that, okay, if I'm buying an insurance policy, I should be aware that how much distribution cost is in that insurance policy, or how much commission that agent has received in this particular policy?
See, that issue has been debated even in the past. Now, what the current regime is or the current regulations are, each insurer will have a board approved policy on the commissions. but that policy is not in the public domain.
Okay.
In the very recent guidelines on remuneration for KMPs, we are nudging the industry to put that policy in the public domain. At the policy level, what is the policy of each insurer, how much commission it will pay should be known, if not at the each policy, but at the level of what is the business strategy of paying the commission. Similar manner, there is a wide variation between what the average rate of commission is there and what the maximum rate of commissions are there. Okay. There is a wide variation in different lines of businesses as well as different channels. There are few channels which give business based on the commission they get. Now, that is something which creates an unhealthy competition within the sector which you referred to earlier in our conversation.
Yes, sir. Sir, so does that mean that, okay, commission can be vary from, because to sell a insurance policy by efforts taken by the agent is completely different from a effort through a bancassurance channel, through a broker and through a automotive MISP channel. So that is also, the regulator is of that view that efforts are different, so commission structure can also be different.
See, in the financial sector, there is a principle which is called same structure, same function, same risk, same regulation. Now, we have to adopt somewhat similar kind of a thing within the insurance sector itself. There are different structures. There is a banks on one side, then there are brokers on the other side, agents on the other side. Their capability or their dependence on that commission income is quite different. For somebody, it is an additional income. Yes. For somebody, it is a main income. Similar manner, somebody who is already a custodian of one's savings has a better chance of, has already an existing relationship with people. Much easier to sell a product, insurance product. On the other hand, somebody who has no relationship, then it becomes more difficult. Similar manner, there are few mandatory products, for example, third-party insurance.
Yes, sir.
Where is the rationale for having any commission on that product? Then there are few products which are easier to sell. A new vehicle purchased, own damage policy,
yes, sir,
versus selling in health insurance, which is a complex product.
Yes.
It requires more effort. So, commission structure should also follow the matrix of effort, complexity, and which channel.
And sir, with persistency also, can it be linked with the persistency? Because if you have sold a policy in first year and it's not continuing for next few years, then it will not serve the purpose.
Wait for the consultation paper. But broadly, I will mention this. There are few channels which are on open architecture but competing on commission, versus few channels which are by regulation not allowed to get into open architecture.
Yes, sir.
Both channels can't have the same level of commissions coming in. So this requires a careful calibration, if we were to say, and we will throw up those options in the consultation paper. But this idea of particularly about persistency, what kind of incentives have to be put into the distribution chain, and what kind of a disincentive for bad behavior should be there. That is our attempt. Writing a regulation and saying that somebody will observe will not work. It is after all a financial incentive or a financial disincentives backed by a system of automatic monitoring, and those incentives or disincentives coming into auto play will be the right way to move forward.
Okay. Sir, on mis-selling through bank branches, RBI has issued a regulation will be implemented from 1st January 2027. So what is IRDAI's view on mis-selling through banca channel? And sir, the open architecture is there in through banca channel, 9 life insurance, 9 health insurance, 9 general insurance, but there is no mandatory open architecture which is not followed by most of the banks.
So, two aspects. Even brokers also have a open architecture, and banks also have 9 plus 9 plus 9 is as good as having an open architecture. Yes, now, open architecture is a matter of choice. It can't be that one have to necessarily have adopt to a open architecture. RBI has done a huge amount of work, and a very, very positive work, and I am grateful that RBI took that initiative, that they came out very, very detailed guidelines or the directions very recently on misselling, compulsory bundling, what is a good conduct in that part. Now it is now the IRDAI's turn to deal with that problem, come out with what will complement RBI's direction, because each of those players are also corporate agents,
Okay.
to bring in some structural improvements. And I'll cite two. One, we have put in a draft amendment, which we brought it out just about a week back. The drafts were released for consultation, which was that for each policy, who is the seller, a person,
Yes, sir.
employee of the
It can be
distributor,
traced.
has to be tagged.
Tagged.
And it's not that somebody sitting in Mumbai is tagged to a policy being sold in Pune. No. In that point of presence or in that branch. And same thing will apply even for the POSPs working with brokers. Person has to be attached, because a misselling, a complaint going misselling against an entity doesn't work unless it is known that who was the person who missold it. Second one, it also gets tagged onto a policy. So when aggregated, a good behavior gets noticed. That is a kind of a structural improvements to be brought in to the system of incentives, or disincentive, if I were to put it in this case.
So you have appreciated RBI's effort on the mis-selling part. Recently, RBI has given a lot of relaxation to attract foreign deposits. So on the similar lines, can we expect something from IRDAI also, because a lot of NRIs want to invest in life insurance product, annuities product?
Now, that is a googly. Googly in the sense, insurance is not a deposit product, and insurance industry, none of the products can provide the same kind of returns which are possible on deposits. But yes, those who want to take either a protection or they want to take any product when they are visiting India, it is possible for them to buy. But industry is not in a position to offer the same kind of a returns on their savings part. There are better enablers of, or the or there are institutions, other institutions, which can provide a much better savings management services rather than the insurers. Insurers' unique point is protection. I am talking about the life insurers. Protection. Protection combined with savings, nobody else can offer. And that is a USP, they have to work on that part.
Yes, sir. Sir, from 1st of April, you have also implemented new accounting framework, Ind AS IRFS 19. So how this will be beneficial for insurance industry? And because presently most of the insurers are not ready to implement it.
See, out of total, say 60 plus all insurers plus reinsurers put together, 11 of them are adopting it, or they have adopted it from 1st April itself. Another about 50 plus would be doing it from the next year, and we have provided them the forbearance for 1 year. And also they have submitted the detailed path with milestones that how they will achieve it. In terms of preparedness, all of them have been submitting their pro forma accounts in the Ind AS format for the last about 3 years. So they have some experience. But in terms of adopting it in full go, yes, it will require an effort. How it will help the industry? This is step 1. Step 2, which will complete this journey, will be the risk-based capital allocation.
Okay.
Because it is not just about maximizing value for the policyholders, it is also maximizing value, not maximizing, but a decent value for the shareholders themselves. If the capital is being sought at a very conservative estimation of risk, that's not the being fair to the shareholders. Different countries have implemented these two pieces at a different point of time. We were in a unique position when we were contemplating both of them around the same time. So the right sequencing to our mind was come out with the Ind AS, which is akin to IFRS, and get a much more transparent and objective assessment of assets, liabilities, income, expenditure, because that has got implications on what kind of a runway or the assumptions have to be provided for the companies when the RBC is rolled out, and my expectation is we should be doing so from the next financial year.
Okay, so from 1st April 2027, the rollout of RBC will be there.
We have to see the results of Ind AS for the first 2 quarters. When the numbers are there, that will help us in making the right assumptions, because RBC will not impact all insurers in the similar manner. Idea of RBC is not to expect insurers to bring in more capital, is rather more efficient usage of capital, but impact will be different. So we have to find ways so that the people who get impacted adversely, they have the runway to fall in line, or they can adapt to the new system. But the idea is, yes, from 1st April 27, RBC should also be in place, but that is our expectation, and we expect to work with the industry.
Okay. So my second last question is that recently you have also linked KMP's remuneration with the customer outcomes, the customer services. So sir, going ahead, the constituents of the customer outcome can be changed, because few constituents like AUM by premium ratio doesn't give the clear picture. So going ahead, this can change, and what actually is the objective of a regulator by linking KMP's remuneration with customer outcome?
Okay. In fact, approach of the authority is to nudge all stakeholders so that they take every decision keeping policyholder at the center of their decision. 3 elements out of 5.
Yes, sir.
There should be full transparency on product performance.
Yes, sir.
There should be full transparency on claim performance. There should be full transparency on grievance performance, on grievance redressal.
Yes, sir.
And everybody should report in the same manner so that policyholders can make comparison. This is obvious. Without these, no public can buy a policy. So this is something which was written in the regulations, but was not getting enough attention. So the idea is nudge all KMPs that by putting that information in the public, they will be helping the sector to grow, for policyholders to take, or the public to take more informed decisions. Those 3, once achieved,
yes,
when the transparency is achieved, there is a maintenance. So maybe the next year may not be required, but till everybody reaches there, those elements would be needed. Just give another example. I talked about 3 out of 5.
Yes, sir.
You gave an example of financial soundness.
Yes, sir.
Financial.
Because, sir, we have spoken to few CEOs, so because I can share their side also to you. They are saying that doesn't make sense, because regulator is also saying that AUM, because if a company is saying selling a more number of single premium policies, AUM can rise, and that is not linked with the customer outcome.
Okay. Now, just to give a perspective on that particular aspect, the largest life insurer in the country has AUM to premium ratio of almost 10, 9.5. Second largest has 5.5. Most of the industry players are at 4. Insurers,
yes, sir,
are the long-term players, meaning that they manage, they provide protection over a long period. They also manage savings over a long period. So a company which has a lower AUM to premium ratio is a reflection of getting short term.
Okay. Yes, sir.
So this is again a broad indication. There is no mathematics behind it that one can compare. These are not exactly a comparable elements, but ratio is an indicator of general soundness, that what one is aiming for. Is one is aiming for mimicking any other financial sector institution, or it is trying to do what the core business of an insurer is. That's on the financial soundness. I'll talk about one more. For example, dark patterns.
Yes, sir.
Which is again an element. That expectation is there should not be any dark patterns. Today, visit any typical website or the website of any insurer. getting a quote or knowing the price without giving personal details is extremely difficult, which is a clear case of dark pattern. So, the linkage of KMP remuneration is remove dark patterns.
So now I'll move to our rapid fire segment and you have to answer these questions spontaneously, sir. Shall I start, sir?
Okay.
So one word that describes the future of India's insurance industry.
A trusted partner for financial protection.
One message from regulator to policyholder.
Be aware of your rights at the time of purchase.
One area of insurance where India can emerge as a global benchmark.
Digital public infrastructure for insurance.
What is the one thing insurance companies need to do immediately to improve customer trust?
Much superior claim experience.
Can public insurance registry become for insurance what credit score became for banking?
Certainly, it can even be more transformative for insurance sector.
India's implementation, accounting reform or business transformation?
First, a business reform.
If IRDAI had one wish from insurance industry, what would it be?
Keep policyholders at the center of all your decisions.
IRDAI today more focused on regulation or development?
Development.
Is insurance for all by 2047 an achievable goal or an aspirational vision?
It is an achievable goal, but that should be understood in the right context. The goal means affordable, accessible and available products for all in all parts of the country.
Okay, so my final question, so what would be your insurance mantra for our viewers, insurance industry policyholders?
Be aware of your rights at the time of purchase or when the policy is being sold to you. To know well about the product, know well about the price, and also know well about the insurer who is selling the policy. While it is equally important to be aware of rights at the time of the claim, but being aware at the time of the purchase avoids a future problem.
Thank you, sir, for your time and insight. Thank you so much. It's a wrap on this edition of Insurance Mantra, a special edition of Insurance Mantra, but we will leave you with our Did You Know? Insurance in India has a history of more than 200 years. The country's first life insurance company, Oriental Life Insurance Company, was established in 1818 in Calcutta. In 1956, the government nationalized the life insurance sector and formed LIC, while general insurance was nationalized in 1973. The insurance sector reopened to private player in year 2000, bringing more competition and customer choice. To regulate the growing insurance industry, Insurance Regulatory and Development Authority of India, IRDAI, was established in year 1999 and became a statutory regulator in April 2000. Today, IRDAI plays a vital role by protecting policyholders' interests, promoting a fair competition, encouraging customer choice, ensuring financial stability of insurers, and supporting healthy growth of India's insurance sector. Simply put, IRDAI is the watchdog of India's insurance industry, working to make insurance safer, stronger, more customer-friendly. So stay informed, stay protected. That's our insurance mantra.